Hey everyone, Otsukimi here, and this video is going to share 10 different tips and tricks that I have learned over the years. I've actually, I'm going to keep this short and sweet compared to my observation videos, things like that, because those are more casual. This is more direct. So, I'm going to share about 10 tips and tricks that I've learned over the course of 5 years, almost 6 years crypto trading, and then 2 to 3 extra years in legacy trading. From all my experience, I'm completely homegrown. I have no financial formal education of any kind. I've done this all by myself. And so I actually have my plan is to have a much bigger list. So this might be the first video of a series of videos. But just things I've kind of picked up over the years, and just thought I would share it. So let's just go ahead and dive right in. All right, so the first thing is very simple. We're on Bitcoin, nothing fancy. We might be getting ready to break out here pretty soon. And one thing you guys might know is I have a various set of disciplines. I use a hybrid discipline of trends and price action, along with my own custom 1A room. That's the whole point of the Apex Academy, is to teach that. Not really going to dive into the Apex Academy. I have other videos if you want to learn more about that. With this, however, I can look at this and see my price action instinct comes into play because we have a trend here. We don't have a trend here, or you can say the trend is ranging. You can also say that, but it's either trend or not trend. When we are in a trend like this, that's not really a trend, or we have a range, we can therefore make an order block, and that's very simple, right? And so this is how you would just make an order block. You would target basically the highs up here, the price candle. We could also do this by looking at a line chart, going like this. Doesn't really matter because this is just a lesson, right? So this would be an order block. Now, this isn't one of the tips and tricks, but this might be an additional one if you don't know how to do this. And this is pretty standard for price action, education, things like that, the way that price action traders operate. But one thing I like to do instead, if I'm actually actively trading this, is to use a fib retracement tool. So this is tip number 1. So we are going to go to the fib retracement tool. It's up here at the top. And then I'm going to go ahead and target the top of this. And then I'm going to go ahead and target the bottom right here. Now that kind of forms kind of the same block. So I want to go ahead and stretch this out. And now I have an order block that is also a fib retracement. And so you can use the fib retracement tool as other things. You don't have to use them just for fib retracements. And you can see here why I do that. You have the high set out and the low set out, which is nothing out of the ordinary because we placed them there, right? But you can also see that you have the mid. And guess what? The mid is respecting these areas right here. So this gives you a 2-in-1. So this gives you reason it's kind of a tip and trick is because, one, it sets out the mid for you. You also have the price identifiable to you as kind of a quick glance, and you don't have to fumble about when you have something like this. You don't if you get rid of this, you're trying to guess where that is. Is it right here? Well, maybe it is, maybe it's not. You don't have to worry about that, right? So you can just kind of analyze it this way. So that's tip and trick number 1. So the next one I'm going to do, I'm kind of bouncing around here. So the order of these might not make sense. They're just coming up off the top of my head and based off the list that I have. I'm going to clear this out. So the second one is going to be if you're dealing with regular candlesticks, and this is there's no real set term for this. I'm just calling it the the wick probability rule. And so what that entails is that we can see, and this is current Bitcoin price action, we can see that we have wicks. So my green candles are actually blue, and my red candles are actually bearish candles that are actually dark, almost pitch black, which is a really dark gray. This is just the color schematic that I want to pick. That's appealing for me, stands out, etc., etc. What really matters for this is the wicks, and you can see is okay for this candle. We got one wick down, another wick down, and you can see these larger wicks, right? And so you can also see in most cases, you can see that there's wicks on both sides. So let's go ahead and go to the chart settings. This might take some explanation a little bit first, but what I am going to do is I'm going to go to, actually I'm going to go here to the symbol section, and then I'm just going to go ahead and get rid of the bodies here. And then I'm going to go ahead and get rid of the borders as well. And so I'm going to go ahead and click OK. A little risky. What are we doing here? I don't actually trade this. This is just a visual. But this shows you all the wicks that take place on the chart, right? And so what I am telling you is that almost in every single candle, there's a wick that goes above the closing price action and then comes back down. That's a wick like this. Or there's a wick that goes down and comes back up, which is like this. So each of these wicks signify a price action that did not hold, either on the bullish side or the bearish side. Now, what does this have to do with anything? Why is this a tip? The reason this exists is because I can calculate the probabilities of this, and what I can do is I can take, let's say that's 1.3, right? Here's another one. This is 1 on this side, but if I go ahead and go above here, it's about 1.4. So I'm not going to do that the whole thing. So what I do is I take like a Monte Carlo statistical method. That's something that I do teach in the academy as well. And I kind of make an average. And so the average is roughly around 1.5. And sometimes about 2%, depending on how active things have been for current price action. So what can we do? Let's go ahead and add these back. And so let's just say 1.5. We've realized that 1.5 is the general size of each wick on average. So if I am trying to play, so let's say this candle is about to end. Let's get a 30 minute. Okay, let's go ahead and get 1 minute. So we can see this candle is about to end in 1 minute. So we can. Actually, I think I will go ahead and go back up. That's not going to give me what I want. What I want to explain to you is that if you are trying to take a long position, and let's say you want to take it at this candle close, you probably should have at least a minimum stop equal to that probability that I shared with you, which is 1.5. And so let's just say, let's just increase it to 2 to give us some room, right? And so this is the 4-hour chart. And so that theoretically should give you an overall average cushion to withstand a wick of the same size. Now, if that's all confusing, I'm going to re-say it again. If you look at the probabilities, this is the wick probability scenario. If I look at the average of the wicks, which is 1.5%, I know that this can withstand, most likely, a wick of 1.5%. And so, therefore, try to adjust your stop loss equal to that probability. And that also goes, by the way, for short positions. If you want to short this, you could want at least a minimum of 1.5. You could do 2 for some extra cushion. So that's kind of how that goes out. The reason I say that is because if you have, let's say you want to long this and your stop is like 1%, now that tight stop is a little bit riskier in the context of that probability because the wicks usually go down to at least 1.5, which would you could then get stopped out. So not a set rule. I've noticed it has helped me, and one thing I've also noticed, if I want to if let's say I do want to enter this position, what you could do is wait for it to go down 1.5% or so, and then you don't want to wait too long either, but then you could start your probability, and then you could have that tighter stop that you want. You could have a longer position, and then you got a higher R&R. So that's tip number 2. A little confusing, but it's worth playing that over again to understand what that means. So on to tip number 3. All right, so tip number 3 kind of goes in line with what we have currently right here. So let's say this is our position. And most of you know right now that TradingView, if you use it, can set alerts, and you can do that fairly quickly. If you have a premium account or whatever the top account is, which is what I have, you could do up to 400 alerts. And this is what I can do here. I've got a set number of alerts. These are some of the things I have going on for that. It's a little different story. But what you can do is you can set alerts, and this might be a little bit simpler for some, but you can set alerts on this position. So for example, if you want this to come down here, you can make a custom alert and do that. However, you can also go here. You have to open this in the settings, but you can add this plus. It used to be added by default. Now it's not. So you need to go in there, and you can just hit click add alert. And so if or when this comes down, you can set your alert, and then you can go ahead and adjust it and say, buy here when it goes down. I don't know, just random, focusing on the alert. You can put in whatever you want, honestly, and you can set the alert name. You can kind of go with that. So, and then it'll show up there. Buy when it goes down. Another thing you can do is, let's say you've entered this position, right? And let's say, let's go ahead and zoom this up. Let's say you want an alert for when it goes down. Well, you can set it down here, and then you'll have an alert automatically set for when you get stopped out. So you can do that. It's pretty simple. You can do, sometimes what I'll do is I'll have one just below, so that way I kind of get an indication. I can look and I can see my position crash, or I could set one at half position. I'll do that as well. And so you can do that as you can put it here as a half stop, and so you can add that in case maybe you want to sell it. Maybe it looks pretty terrible, and you get an alert, and then it might save you some money, right? So you can also do that. Another thing you can do is you can set one up here, and you can kind of adjust this as accordingly, and you can say, take profit. So you can do that, and so I do all these, honestly. And then another thing you can do is put one right around at the mid, or wherever you want that makes sense, right? And then you can add another one. You can say consider take profit on weakness, or to profit from a position. So you can do that. Pretty simple stuff. So that is that's tip number 3, and we'll go on tip number 4 now. All right, so tip number 4, this is very similar as well. I'm going to go ahead and get rid of this. We're actually going to go back to kind of what we were thinking about with the order block. So let's say that's your order block. I messed that up here. There we go. So we have something like this. What you can do is you can set that alert there, and you can set another alert here. So that way you kind of get like a range break, so to speak, and then you can kind of analyze that. It's like, all right, we're breaking this. You can even put it above, just outside the bounds. So that way, like, you get a confirmed break. You can do that. And so that's very helpful. Very similar as the position approach, but it's also worth noting. All right, so tip number 5 is I'm going to go ahead and keep going on the alert section. So what you can also do is you can set alerts for trends. So let's say you have an alert like this. If this goes down below, you can just double click that. Actually, you single click it, I'm sorry, and you get this bar right here. And you go ahead and click this little alert icon. And then you can set that alert. And then you can just hit create, or you can add to it. And then it gives you a little alert, clock thingy. And so when or if this happens to cross this line, it will send you an alert, just like it would a regular alert. So very simple, more of an extension with the other alerts, but learn to play with these alerts. Like, you get additional alerts, like on the premium plan. If you trade with a size, or you trade with any sort of frequency, it's worth getting the increased plan, because you get 400 alerts, and you used to only get 400 alerts combined with everything. But now you get different ones. So, um, and I'll add this in as part of the tips. You get 20, you get 400 price extra alerts available, and then you get 400 technical alerts. You used to only get 400 for one, and so now you get them each. So if you want to go here, let's say you wanted to set that alert. So now we have 28 and 143. Now we can go to 29 and 143. So you actually get 800 alerts now instead of 400. You get double the alerts. It's very great because if you are setting up bots like I am, that helps you manage that, right? So I've got some A-written bots, and if you are interested, you can look in the Telegram, and you can. It's free to join that, and then it's also free to sign up. And I've got something called Apex Pass as well. That with a free referral link, you can get lots of discount. It's kind of like a Patreon type of thing. But go ahead and go to Discord if you see that, or Telegram. I'm sorry, I meant Telegram this whole time. I'm sorry if I said Discord. Go to my free Telegram, the Otsu House. It's on the link in my Twitter bio, and I'll try to put it in this video as well in the description. But that kind of gives you an idea. It is worth getting the increased alert plan for that. So, all right, that is technically the fifth, and let's go on to the next. All right, so for the next one, we're actually going to take a detour away from Trading View because this isn't just a Trading View or trading tips and tricks. This is just how to manage crypto in general. We're going to go ahead and go to CoinGecko. You don't have to use CoinGecko. You can use it. Also works for CoinMarketCap. There's various other ones that work. You could anywhere that has volume, basically, as a statistic that you can look at. So this is the CoinMarketCap, or this is the CoinGecko chart. And what we can do here is we can analyze this, and so we can see is here's the ranking, and this is generally by default ranking in terms of market cap. The market cap should correlate with this number, generally speaking. It's not always the case, believe it or not, but 99.999% of the time it is the case. So those numbers are matching. What isn't matching is everything else, basically. And what we want to do is we want to look at the 24-hour value. And so we see here that Bitcoin's ranked number one. It's pretty much always ranked number one. So you got 1, 2, 3, 4, all the way to 10, right? And so this is our 10 stack. And so what we can do is we can adjust the volume, and then we can rank it to where we care more about the volume. So this is an order of volume. Tether is number one, and then Bitcoin is number two, Ethereum is number three. And so what do we see here? We see that just by the past 24 hours, according to CoinGecko, more people are much more interested in Tether than they are in Bitcoin. And so much so it's about 28 billion versus 15 billion. So that's what we want to look at as well. And you can see this throughout. So like Binance USD is supposed to be ranked number 13 in terms of market cap, and it's ranked about 6 or 7. True USD is ranked number 34, but it's up here in the top 10. But then we have we have ARB as well, and it's ranked 39. So what can we look at? What does this tell us? This is basically a poor man's relative value chart, and this is probably one of my most secretive tips and tricks that have been that's on this list, because I don't share it too often. I think the only place I've ever shared it is in a paid channel that I have, that I no longer have currently. So this is something that has helped me a lot. So what I want to do is I'll look at the 24-hour volume, and I don't really care too much about the stable coins. I care about the actual coins. So I can look at ARB. And then, so if we look at right here, the numbers that really stand out for me is ARB. These don't necessarily stand out to me because, this is about where 14 and 10 should be, more so 14. But I see XSP, and that's very interesting to me. So we're going to keep those in mind. We're also going to keep CFX in mind. So let's go ahead and we'll just focus on ARB for now. It's ranked 39, right? And so we're going to go ahead and type that in, ARB. And you can just type in whatever you want. We could just look at Binance because it's probably got more history. And here you can see a little bit of a detail with it. I'm going to go ahead and go to the 1 hour chart. And so we can see there's some chance at maybe a divergence or something here, but the reason I do this is because it tells you flat out like where the volume is compared to other coins. So therefore, it should be more liquid than other coins. You should have better trading opportunities with these coins. So that's worth keeping in mind. So right now, ARB doesn't look too bad. We can look at the CFX, and we can see how that's looking, and that's like so. SXP, that's an older coin actually, but we'll go ahead and check it out. And it seems like something's going on here, but you get the idea, right? So the tip of this is the kind of the tricks more than a tip, but like it's basically a poor man's relative value. It works great for me, honestly. I like doing this more than just looking at relative value in other ways. So there's that one. Let's move on to the next. All right, so the next tip is we're going to kind of stay off TradingView, kind of, sort of. We're going to bring it back in, and that's by looking at how to add watch lists. And one thing that we can see here is we're going to go back. We're just going to go back to a Bitcoin chart. Just take whatever and kind of clean this up a little bit. But what we can see here is we have a little plus symbol right here. And that's just to add a symbol, right? And so you can do what you can do is you click this little triangle right here. You can look at it down, and this is some of these are old right here. Apex list. This is what I use for Apex Academy members. We go over those 30 coins, and we do all that. I got stocks set out. I got these other ones. I'm not really even sure what some of these are actually, but you see this here, this KuCoin USDT markets. And so what this is this analyzes all the tether-based pairs on KuCoin. Now, as you can see, this is 700 coins. How did I do that? Well, I didn't add these. I didn't sit here and add these. You can import lists. So you can create a new list, or I can import a new one. One thing, if I want to click on this, it'll take me to my desktop or my file manager, depending on what kind of computer you have. But what you want to do is you actually want to go to a place called Sandwich Finance. This is a place where you can just get all your watch lists that you want. So what you do, I won't click on these because as soon as you click on them, it'll automatically download a file. But you can look at by exchange. You can do like Coinbase, you can do Kraken. It seems like they've added some since I looked at this last, because you got Bybit. And so if you want all Bybit markets, all USD markets, things like that, they don't have BingX, which is what I personally use. But what you can do is, let's say you want only ETH markets for Binance, click on that, right? If you want, Coinbase, all markets or USDC markets, you can do that. And you basically click on it, it sends you a file. You go ahead and you hit import list, and you just click on the file. Simple as that. And what it'll do is it'll load that up. And so that's just another little tip. I think that's good if you're doing a lot of perps or options, things like that, especially for things like Bybit. It's really helpful. So it's kind of a quick list. Could be a little overwhelming at first. I think it was more than 700, but I've kind of gotten it to slim down. So anyway, that's the next tip, and we'll keep going. All right, so the next tip is, let's say you want an average of different prices of Bitcoin. Let's say you look at different exchanges and you see like Coinbase has a different price than Binance has a different price than KuCoin. And you kind of want to see like, well, which one's correct? Which one should I really go by? Does it matter? What if I want maybe like a smooth average of the three? There's different ways you can do that. And so we'll go ahead and click on this. And what you want to do, you actually pick the exchange that you want. So let's say you're going to stick with Binance. All right. So you go ahead and just click on that. You do not get rid of this. Okay. So you go ahead and click this plus icon. And now you can get a different list. So what you want to do is, once you have this, you can hold the shift button. Make sure you hold down the shift button, and then say you click Coinbase. And so it adds that as well. And let's go ahead and add the plus sign again. Let's say you want to add KuCoin as well. So now you got 3 exchanges. So let's go ahead and add that. But one thing you will see is this reads 85,000 versus the 28,000. That's not what we want, right? So let's go ahead and go up to this again. And what you want to do is you want to hit the parentheses on both sides, and then you hit divided by 3, which is the number of exchanges that you're using. Go ahead and click enter, and now you have your average. Here's your layout of all the different exchanges divided by 3. It's going to still put Binance because that's the first one that we put in there, and then you got your price, and so that's the average price. So currently, this is the Coinbase chart. It shows 600, and the average is 589. So gives you an idea. As a part 2 to this, another thing you can do is, let's say you want to do. One thing that we do have to do is we have to calibrate this basically. So let's go ahead and click the USD Coinbase, which is what I have. This is a current position that I have. So let's go ahead and go to. Let's go ahead and go to a different one. Let's go ahead and go to. Let's go to Binance. All right, so we'll go back to Binance. But we'll do the US dollar pair. What we can also do is we can hit BTC, and let's say I want that in Tether. And so I hit shift, hit Binance. And so we're going to use all Binance exchange charts for this, but we're going to use different stable coins. So another one would be USDC. You got you're going to hit shift for that as well. And then let's go ahead and do BUSD for Binance. So now we got 4 of them. So now we got the USD pair, we got the Tether pair, we got the USD coin, and we got the Binance USD. And so we're going to go ahead and close these by parentheses, and then hit divided by 4, because that's how many we're using. And so now this is going to be the average between the US dollar pair, Tether pair, USDC pair, and the Bitcoin US dollar pair. So pretty handy. It doesn't, not useful directly if you stick with one particular exchange, but it is useful to explain, maybe like a comprehensive way to analyze something. So very neat little trick in my opinion. All right, another trick I can use, it's kind of similar to this. It kind of goes in the same vein. It's not like this, but it does relate. So let's say go to KuCoin. Let's say you actively trade on KuCoin, right? And you want to set an alert, but you're somebody like me. You hate like noise. I cannot stand too much noise. And if I put in, let's say I got this going on. I got this. I got random things. I want to add a position, but it's kind of like a little noisy. That's not a good visual example, but you see what I'm saying. So let's say you want to keep things clean, right? So let's say you like KuCoin. Let's say you want to long this as well. So what you want to do, let's just say your stop is roughly 5%. So instead of putting it here, we're going to go to Binance instead. And so with this, what you can do is you can set that position, and you can do that same 5%, and then you can set that alert here. Say you want to set that alert up here. Now you can do so. And so now you can go back to the KuCoin chart, and you got a free visual chart. So you got your alerts and everything set on a different chart basically than this one. Now there is going to be some variance to that, because you are going to have some issues as far as the price point difference and things like that. But overall, it can be handy if you have something a little more abstract, right? So little quick tip, but it can be useful. So another way that you can actually do this is by adjusting this variable by the simple search variable by a little bit. So what do I mean by that? Let's say this is extremely important to you, like you can't use the Binance, right? What you can do is let's say you want to track Atom, for example. You like Atom a lot. You are looking to buy it, but you don't want the noise, right? So one thing you can do is, let's take a look at this. All right, so right now it's worth $11.40. So what we can do, we already have the symbol search. This is a KuCoin. If you click this, this by default is already KuCoin. It won't be anything else. So what you can do is you can hit minus, and you can minus it by 0.1 cent. So go ahead and click enter. And so now you have the same price action, but it's a little bit different. And it should be, this should kind of update here shortly. Let's go ahead and go back here and see if we get this right. So you're at 11 and 39. So let's go ahead and do, you need to add the 0 first. And so go ahead and do, let's go ahead and just do 1. And so now you got 10.48. See what I'm saying? So, but $1 is very big, right? So let's go ahead and do 1 penny. And so you can go ahead and add that. So now we got 11.40 versus 11.39 for. So we're about 1 cent off. Here's the cool thing. You go ahead and adjust this. Let's say, let's get this out of the way. So let's say you have an order block right here, right? And so you like that, it's important to you, but you don't want to mess with it, right? Go ahead and click on this, add your minus 1 penny, goes away. Order block goes away. And so now you can mess with this. What you can really do is kind of just, you can actually get rid of it here and then add it on the -1 or even the minus 1/10 of a cent. You can click enter. And so now it should be visually gone. And let's say you want to add an alert here as well. Let's say if it goes up to this price, it's going to show you that the spread is going to be a little bit differently. But you can go ahead. Most of the time that's going to be fine anyway. So go ahead and go to that. You click on this. It doesn't exist. It exists there. It exists like 1/10 of a second off, but it's still there, and it'll alert you when that time comes. So very neat little trick. You can kind of hide those alerts while still doing these things. I think it's really cool, honestly. So the last tip is more so just kind of a general observation that I've seen. It has nothing to do with trading views, more portfolio management, and that is when you're trading. Let's say say I am using Bing X. I don't know where it's at. Here we go. So this isn't. I don't think this is what I really want, but I use Bing X, right? And so I use other exchanges as well, but I currently have a partnership with Bing X, so that's one reason why. If you are trying to do leverage, especially, or any kind of portfolio management, please do not put 100% of your portfolio on there. I've never done that. It's something that I generally try not to put more than 5% on it. So if I lose it, I only lose 5% of my portfolio. And so it goes different ways, right? And so be conscious about that. And my personal trick is that I use leverage to my advantage that way. I don't use, let's say you have $100,000, you don't put all $100,000 on there, okay? Because you might be thinking, well, if I have that $100,000 and I leverage it by 20x, now I have $20,000. No, that is true, of course, but if you lose that, you lose everything. So what's better to do it instead of having your $100,000 on there, only have $5,000 there, and you might say, oh, so that's so little, you're not going to make any money. And first of all, if you're trying to maximize that way, that's the wrong approach. Second of all, you can take that 5,000 and you can leverage by 20. For example, I'm not saying you should, but you could use up to 20x leverage, and you could get that same $100,000 as you would have without having that risk associated with losing all of it. So that's kind of what's in mind. It's more of a little bit of a tip, I should say, because I don't want you to lose all your money while you're trying to figure all this out. So anyway, that's it. That's the last tip. I think that's 10. If it isn't, I'll adjust it in the title. Anyway, hope you have a great day.